Today, we'll delve deeply into some data gleaned from our global investment holdings, which implies that Tesla is well on its path to being a $10 trillion company, and that you should buy Tesla stock today, not tomorrow, and certainly not in 10 years. Value per share as of right now is $3,369. Shares of Tesla ended the day at over $900. According to Holland's valuation, each share of Tesla stock is currently overpriced by almost $2,200. That is, the value of a share of Tesla stock should be at least 3 times what it is right now. Obviously, it's time to talk about this study. This study makes one questionable assumption, but the more we dig into it and the logic behind it, the more we come around to thinking that our Tesla shares are really that overvalued. Is there a chance that things may pick up in the next few months? Let's watch the clip and see for ourselves. The executive summary on the consistent growth in value of Tesla shares was issued recently by Hole in Global Investment. We agree with them that they have a solid understanding of how and why Tesla is so successful. Their research predicts that by 2050, yearly EV sales would reach 206 million due to regulations and the success of EVs in developing countries. Hey, we warned you there might be a contentious premise in this paper. A quarter of all EV sales will go to Tesla in the next decade, thanks to the company's early start. In addition to greater profit margins and large cash reserves, both of which support continuous innovation, Tesla's significant manufacturing advantage over conventional and new EV businesses provides. Tesla has an advantage over its rivals because of its fully integrated energy generation and storage technologies. In order to reduce EV operating costs, Tesla wants to reduce the price of lithium batteries, while the company's primary competitors are in deep debt. Tesla is still one of the most shorted stocks today, yet its share price has crushed shorts with a 720 return by 2020, proving the doubters wrong. Global investment firms are of the opinion that Tesla shares, at their current price, offer investors a once-in-a-generation buying opportunity due to their exceptional upside potential. Our current valuation of Tesla is $3,369 per share, which is based on Holland's study of the company's discounted cash flow forecast over the next 30 years. We have faith that Tesla will be financially successful in the long run. Our discounted cash flow estimate for Tesla rises from $6,244 in 2030 to $9,056 in 2040. Here we come to the most contentious premise in the whole report, so make sure you're paying attention. This is a major factor in determining their worth. Our 30-year global demand forecast predicts that passenger vehicle sales around the world will double, reaching 206 million units by 2050, which is good news for the company. By 2050, most of the world is predicted to have banned the use of vehicles powered by internal combustion engines, and this restriction is expected to take effect in 2040. I'm going to jump right in here. These are, in our opinion, highly plausible hypotheses. Their research shows that over the next 3 decades, developing markets will account for 75% of the world's demand for electric vehicles due to expanding incomes and population. This is crucial because it will make it possible for more than 1 billion individuals to buy their first electric car. In the next 30 years, China and India will account for 40% of all EV sales. It's important to recognize the perspective from which Holden is writing. As the global population increases by billions, the demand for automobiles will effectively double. The Dutch analyst predicts that Tesla will sell over 20% of the world's passenger cars in the next decade, by 2025, when production will have reached around 5.5 million vehicles. Higher profit margins and substantial cash reserves enable continued innovation at Tesla thanks to their significant manufacturing advantage over conventional combustion engines and new EV brands. Second, we'd want to emphasize on the fact that very few investors appreciate just how challenging it is to go from producing cars with internal combustion engines to producing electric vehicles. The cheaper lithium batteries offered by Tesla will significantly reduce running costs for EVs. Tesla also anticipates a drop in the price of its lithium-ion batteries of more than 50% over the next 3 years. Many thanks to Tesla's Battery Investor Day for unveiling these strategies. Importantly, the companies that are most directly in competition with Tesla are all deeply in debt. Over $900 billion in debt is carried by Toyota, Ford, and General Motors, the three largest internal combustion engine automakers in the world. Regarding future financial and valuation projections, please give it some thought. In 2040, we expect annual vehicle production to peak at 342 million units, with most of that coming from sales of electric cars, EVs, software updates, vehicle services, etc. The energy division of Tesla, which is projected to earn $2 trillion by 2039 and $3 trillion by 2047. In addition, Holland predicted that free cash flow would hit $500 billion annually by 2037 and surpass $1 trillion by 2047. Tesla has amassed a massive cash reserve, which it might invest in areas of the economy outside of electric vehicles and energy. There are some really brazen assumptions about Holland here. Remember that in their calculations, Holland is only factoring in software sales and not robotaxi sales. No other industries are being considered besides the automobile and energy ones. Revenue from robotaxi rides, sales of Tesla bots, and membership fees for Tesla owners are all accounted for in our forecast. We find that stock price projections made in Holland are rather conservative. They are ignoring the most lucrative potential market for Tesla, the robotaxi industry. Alternatively, Tesla might use the money to start a major share repurchase program or to pay dividends to its investors. Eventually, Tesla will be in the unenviable position of having to return dividends because the company has no plausible use for the vast sums of money it is printing. To get at our $3,369 per share estimate for Tesla, we applied a discounted cash flow analysis. We stress once more that the current share price is not indicative of future prices. Let's pretend it's the year 2030 and one share of Tesla is actually worth $6,244. We conclude that Tesla should be a cornerstone asset in any investor's portfolio in light of Holland's current DCF valuation objective of $3,369. According to Holland, the major investment opportunity over the next 20 to 30 years will be the worldwide transition from internal combustion engine vehicles to electric vehicles, together with related investments in renewable energy and infrastructure, EV charging networks, and energy storage systems. A thought to ponder. By 2035, annual sales of electric cars, EVs, will have reached 864 million, and by 2049, that number will have skyrocketed to 206 million. As the year 2050 draws near, the world's fleet of internal combustion engine cars would have to be phased out by a certain date. As countries revive efforts to reduce greenhouse gas emissions, demand for EVs is expected to skyrocket over the next 2 decades. We suggest you all take a moment to pause and examine more closely in order to fully absorb this. Car ownership is projected to increase from 10% in 2015 to 30% in 2050 as a result of increased per capita income in developing markets, where GDP growth is forecast to be much stronger than in developed countries. Holland predicts that by 2050, about 2 billion electric vehicles will be on the road worldwide. The EV market is sending a strong message to traditional automakers that Tesla will dominate for the next 30 years. Alternatively, they could go out of business in as soon as 10 years if they don't come up with new ideas and produce vehicles that can compete with the feeling of pride and accomplishment felt by Tesla owners upon taking their first ride in a Tesla. If Tesla were to account for 25% of the world's EV fleet, it would be a major player in the EV market. Holland's demand forecasting model predicted, by 2025, Tesla expects annual sales of 5.5 million EVs, rising to 14.85 million in 2030 and 34.1 million in 2040. Holland estimates that in the next 3 decades, Tesla will control 20 to 22% of the worldwide EV market. We agree with Holland that the current manufacturers of internal combustion engines will not be able to make the transition to EVs. Tesla will put the most pressure on established manufacturers over the coming decade. Finally, by 2025, Tesla will be able to resume dividend payments using the free cash flow it has been accumulating. What do you make of Holland's projected figure, then? Please share your ideas with us.